The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 5th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what it is they're communicating to you and I at just past 1 o'clock in the afternoon on this terrific Tuesday. Of course, I'm absolutely grateful for your presence here. Hope you had a great New Year. Sorry that my New Year is kicked off one day later with you, but just simply grateful to be here. Most importantly, I'm here to serve you. So feel free, pick up that phone, dial on in at 877-927-6648. Internationally, our number is 727-445-1044. Would love to hear from you. Of course, this is, as I say, terrific Tuesday, sometimes called Turnaround Tuesday. We'll see if that's the case out there. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off about 64 points. She's traded at 17,085. S&P is off 2 points at 2,010. NASDAQ Composite down 16 at 4886. Russell 2000, no idea where that's trading. I sent the message to eSignal and said, hey, please correct it because it's not correct on my system. It's not trading down 27 points out there. But nonetheless, the IWM, that is actually up 1 penny out there. Something to think about. Goldilocks is up $1. It's trading at 1077. I'm going to share with you a Stevieism when we take a look at gold today. Maybe we'll help you to understand why gold is doing what it's doing, and maybe a way that you're taking a look at it that might make you say, something to think about. We got light sweet crude. She's trading down 79 cents at 35.96. Leading the charge here to the upside. Public storage up about 2.5%, $6 and change. Equinox up $5, a little about near about 2%. Athena Health up where'd that go? $5.66, 3.5% to the upside. You've got Sturm Ruger, the gun company, that's up 7%. I think what's the other gun company out there? Smith & Wesson. I know they're trading to the upside out here. To the downside, leading the charge dollar-wise, off 3% as well, is Priceline. That's off $38. Regenerate Pharmaceuticals down 7. Amazon is off 6. And Aptic's down 5. So lots to take a look at. And where do we begin? Do we want to begin with short-term or long-term? Let's begin with short term to give you a feel as to what the markets are doing out here. Let me take a look at let's start off with the NQ, and let's take a look at the 5-hour chart out here. This is something interesting that I noticed. This is one for the textbooks out here. Let me turn off a couple of things because what I want to show you is I want to show you a couple of 3-drive to the bottom patterns that have formed out here. So let's turn off our TAS boxes. Let's just clean up the chart out here. It makes it a whole lot easier. So we're going to start with a fresh palette. And what we're going to do, I'm going to show you 2 different 3-drive to a bottom patterns that have formed inside of the NQ. Now, what we're going to do here first, we're just going to take a look at the time distance, because when you take a look at those 3-drive patterns, you really don't want to force them. What I mean by force them is they need to really complete within a couple of bars, you know, at the max out here. So I'm taking a look at the first drive to the downside that I'm looking at is from the trading date of November 24th. And the second low that comes comes in here is on the trading date of December 3rd. That was between 2 and, because it's a 5-hour chart, between 2 and the contract close. And you can see that that was basically 32 bars worth of movement. That third drive that occurred, we saw the bottom that actually formed at about 9 o'clock in the morning on December 14th. 2 bars later, if we just take a look at another 32 bars to the upside, we saw a nice bounce inside the marketplace. So that is the 3 drive. That is the first 3 drive to a bottom pattern inside of the NQ. Now, take a look at this. If we look at this first drive here, again, started same beginning point, November 24th, and we move that all the way to the low out here on December 14th, look at where the market made a bottom yesterday at about noontime. Now, this here was 66 bars out there. So we just multiply that times 2 and get to 132 bars or so, right? 66, yeah, 132. That would make sense. And take a look at where the bottom 2 bars prior to that. So if you are a believer in the 3 drive pattern, and there's really no reason that you shouldn't, of course, what you want to make sure is you want to make sure that the bulls and the bears are communicating to you and I. And the way that they do that is by what? By giving us bullish and bearish reversal signals. Well, take a look at this 5-hour chart out here. Take a look at, now back here when the bottom was made on December 14th, when I say a bottom with regard to a rally that formed, or a retracement, however you want to take a look at it. Nice old bullish engulfing candle that occurred on that very next session on December 14th. Where are my candles at? Well, take a look at what took place yesterday as the market was moving down into noon. Nice big old bullish engulfing candle. What that suggests to both you and I, this support out here, this is the NQ that we're looking at the low of 44.2975. If that's taken out, then this 3 drive to a pattern has failed. But until it does that, the message that's being communicated to you and I is prepare for a bounce or a bottom. We never know which one it is out here. We just know to prepare for it, or that we should consider preparing for it. If we go take a look at what those TAS profiles look like out here, well, on the 300-minute time frame, interestingly enough, we can see that price has been trading with inside those boxes. What do I mean by that? I mean that the lows have held as support, the lows being 44.52, so that would be another area for us to pay attention to. More importantly, to pay attention to, if this 3 drive is going to materialize into anything, we can see that the resistance of that 5-hour time frame will need to be taken out. Thus far, it is held as resistance. That was coming into about the midnight time frame last night. So that says the area to be paying attention to on the 5-hour time frame is 45.18. We're going to call it 45.19. If we see a close above that, and by the way, this is set up on a 5-hour chart. This is set up here where the bears, where the sellers are truly in control. We can say that because that point of control is closer to the resistance line. So if in fact the bulls are going to be able to get any kind of bounce going, they need to pay it. They need to get above that 45.19 level, and that's an area to be watching. So you've got 2 patterns out here. They both suggest, at least on the shorter term time frame, that to anticipate a bounce would not be out of the question, and a bounce that could take us to a fairly decent price out here. You could even say 46.48 would be in the cards. That would mean that you'd have to get a close above 45.47. So that's what's going on the short term time frame. When we take a look, when I say short term, 5-hour time frame for the NQ. Of course, for those of you that like those 7th inning stretch patterns out here, that's what took place yesterday afternoon at 11:30. You saw how the market move down lower, get into a nice little hammer or doji candle, nice little bullish engulfing candle that formed right after that. Looks to me like an A to B equals C to. Oh, that's the ES Mini. Hey, it was doing the same thing on the NQ, but the ES Mini likely headed for 2029. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up off 72 right now, S&P down 4. And I had intended on actually putting up the 30-minute chart here for the NQ since we were taking a look at the 5-hour time frame. I think it was the 5-hour time frame with those 3 drives to a bottom pattern that has formed out here. So there's no question that it has formed. We take a look at those 2 time frames. Now, where is it that the NQ could bounce? Now, if we take a look at the NQ, by the way, we can see that as it moved lower into the 11:30 time frame yesterday, it was doing it with less relative weakness, formed a nice little hammer candle out there. That actual weakness didn't really show up until 2:30, and then the market went ahead and took off to the upside. Nice big old bullish engulfing candle. In fact, it did engulf the prior, well, all the way back to, just to put this in perspective, all the way back to 9:30. So that move that we were taking a look at yesterday between 3:30 and 4 engulfed the entire sessions of all day long in that 30-minute stretch out there. That was after moving lower with less relative weakness. Now, why did the NASDAQ futures, the ES Mini, the Dow futures, why did they stop at 22:30? So it was at 10:30 in the evening last night, and I think it was the ES Mini that actually went till midnight. But why did they in essence stop there? Well, take a look at that same pattern that you and I look at, that little 7th inning stretch out here. That's exactly what formed at 22:30 hours last night. Market goes ahead and moves lower. In fact, we've seen a lower low that took place just as we were coming on the air at 1 o'clock. Nice little hammer candle that is formed down there. That's at a price level, by the way, of 44.57. So what it looks like to me that may be forming out here is an A to B equals CD pattern to the upside. If we look at that, that's going to give us a price projection right now. That's assuming the hammer candle doesn't get taken out, of about 45.50. We're going to look at both sides of the trade because we're taking a look at an intraday time period. We took a look at a 5-hour chart or 300 minutes. Here's a 30-minute chart. But let's go take a look at what it says on the daily chart, because the daily says that what really would be unfolding out here is likely nothing more than a counter trend rally. Now, why do I say that? Well, let's go take a look at let's take a look at let's look at both sides of the trade, right? Before I do that, let's take a look at the downside opportunity here if in fact these patterns fail, because in fact they may. So if we look at the NQ out here, where is it? The NQ, if the 3-drive pattern fails, if yesterday's 7th wave move to the downside fails, this is going to, and by the way, what the market also did inside the NQ yesterday was making all those patterns, was it made a 1-to-1 A to B equals CD to the downside. You can see here the A point out here is on the trading day of December 2nd. Your B point out here is December 14th. Makes a 86% retracement up into the December 29th level. You make a 1-to-1 A to B equals CD pattern. So again, now look, the markets only make a 1-to-1 pattern 60% of the time. And at this stage here, is this going to turn out to be one of those 40%ers where it goes beyond this? Well, if it does, it'll take out those lows of yesterday, and then price inside the NQ will go ahead and target the 43.65 level. So that takes a look at both sides of the trade, what you could anticipate. Now, if we take a look at the actual indices out here, and we take a look at the NASDAQ composite, try to get a feel for what's going on, there's a couple of other things. So one of the things we know about yesterday is on the gap down inside the market is that a short-term trend line was taken out. Now, that short-term trend line is off of the lows from August 24th. That's my first touch point. Touch point number 2 is going to be September 29th. Touch point number 3, in essence, becomes that little hammer candle from December the 14th. And we can see that price has broken through that. Now, yesterday, big, huge gap down, yet it still formed a hammer candle. Now, that means that we've got the bulls and the bears truly duking it out, because with regard to this gap down, you know that you and I need to fill in that gap of price out here. And that says, hey, maybe not such a hammer candle out here. But what price actually did yesterday was it came back to a level of where the NQ, or the NASDAQ composite, I should say, had actually broken out. Look, one of the ways that we take a look at breakouts and breakdowns, one of the friends for both you and I, are gaps. Gaps are nothing more than wide-ranging bars, whether it's to the upside or to the downside. When you've got them both going in the opposite directions, what it's really communicating to you is consolidation. So what you and I can conclude about yesterday is that the market inside the composite is doing nothing more than continuing to consolidate. That consolidation, the actual breakout, what I would teach you, which I have taught you over the years out here, is when you take a look at a breakout, when you take a look at a wide-ranging bar, you like to go back a bar or two, typically to where you have some light volume. If I take a look at the indice out here, I don't have a volume characteristic that we can look at. But what we can see is that the prior day, in essence, qualified as a swing point. So that is really where the breakout began, right around 48.36. Market does what? Gaps up that next day, moves higher, creates a resistance line out here. That's the red diagonal line. What did the market do yesterday? Gap down into the breakout. So until you see a close below 48.36 inside the NASDAQ, this is just setting up a consolidation. Now, if it's only a counter trend rally, assuming that the rally does take hold, whether it's today or tomorrow, whenever this is, as long as those lows don't get taken out, then what we would anticipate is the counter trend rally. If it's just a counter trend rally, all we would see is a move up to that little rising trend channel that price broke through yesterday. That, quite frankly, should be our next resistance point if the market is going to continue to cascade to the downside. If price gets above that, then what you and I need to pay attention to are the trading sessions here from December 29th and the 30th. Really, it's the trading sessions from December 28th and December 31st, which created that little island top up here. So we've got some significant reversal patterns. Last time we had an island top, by the way, inside the NASDAQ composite was, in essence, the trading sessions. Oh, now my cursor's not working. There we go. Between July 16th and July 22nd. Created that little island top out there inside of the NASDAQ. So we're going to pay attention to both of these patterns out there, but that is what's going on inside of the cash indice out here, and that looks at both sides of the trades, both on a short-term as well as the longer-term basis. Now, let's move from the indices and let's go take a look at some other things that are going on inside the market. Let's go take a look at Goldilocks. Now, how many of you simply take a look at the strength that's inside the U.S. dollar index, which, by the way, well, this is a 10-minute delay, but I have it up 53 pennies, 532 ticks, trading out at 99.50. How many of you out there take a look at the price of gold, which is up 250, trading out at 1077, and say, no way. If that U.S. dollar index is going higher, then what's going to happen with gold, it's going to get croaked. Are you a believer in that? And if so, the question that I would pose to you is, why? In fact, let's go take a look at gold, though, just priced the way that maybe most people might take a look at it. Let's go see what we can glean out of this. Let's go ahead and what we do know is we've seen gold here. Truly, somebody's got their thumb on it because the closing price of gold has pretty much been in a narrow banded range out here. If we take a look at some TAS profiles, let's go do that real quickly. And then I'll go ahead and blow apart the fallacy, because that's all it is when we take a look at gold priced in dollars out there. Or at least that's what Stevie believes, and I'm just simply going to go ahead and prove the point to you. Now, if we take a look at gold, we can see that gold here has got a new daily box out here, and that daily box out here says, hey, 1077, is that what the number 1077.70 is the level of resistance? That if, in fact, price can get above it, price will move up to 1089 and then 1104, maybe even more than that. But you're going to have to hold on to the break while I then blow apart your whole fallacy of gold priced just in dollars. Stevie Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 69, S&P's down 3. We're going out to Plymouth to speak with Tom. Tom, thanks for calling. Thanks for holding. Happy New Year to you. How you doing this afternoon?
I'm doing great, Steve. How about yourself? Happy New Year to you.
Thank you. Much appreciated. I'm doing much better than yesterday. You want a little under the weather. You wanted to take a look at USLV, which is the velocity shares, 3-time along the silver. Go ahead and tell us what you're doing, how I can best help you.
Well, I keep making a little bit on this thing every, it goes up a little bit. So I think it's toying with me. Then it pulls back, and I seem to be, I try to take Tom's advice, is it's a daily trading vehicle, and don't stay in it. But I'm back in it again for like the third or fourth time.
Okay.
And I've got a little bit on the table. I think I'm in at 981. So I'm wondering if I'm hoping that one of these days it takes off, but it doesn't seem to want to do that.
Yeah, so, great advice that Tom gives, which is that this is a daily trading vehicle. And that advice is especially important when whatever the underlying instrument is, for any 3-time ETF out there, whenever the underlying instrument is just simply trading sideways, you're just simply going to get completely chopped up versus playing something like the SLV, which would be the 1-to-1. So if you had a longer-term outlook with regard to silver, I would say based on the past month and a half, 2 months or so out here, at least 2 months, that you would be better off in that type of vehicle. And then when you saw things trending, you could take a look at USLV for a longer period of time, which I think was really your question. To use this as a daily trading vehicle sounds to me like you've got that nailed, so you don't need any assistance there. If this thing does run higher, it's got some fairly decent resistance at 1111 or 1141, but that's pretty, and those are, I'm just taking a look at the TAS market profiles, but on these 300 percenters, it's really going to be about the underlying instrument. So I think you've got it nailed, but again, the longer-term view, just go take a look at the 1-to-1 or maybe a mining equity, something along those lines. That would be my best advice.
Okay, well, I'll take a look at that. I'll probably get out of it today and just take a little bit of money and be done with it.
Yeah, I think, there's nothing wrong with that. Taking money is a good thing.
Yeah, I just don't trust it.
Yeah, like I say, if you're looking at it from a longer term trade, then consider just going instead. Just drop the U and just go to the SLV, and then I think that's the 1-to-1. You won't get chopped up as much.
Okay, Steve. Well, thanks for the advice. Appreciate it.
You bet. That was Tom in Plymouth, and that's a great advice that he shared that goes for each of you out there that are trading those 300 percenters. Where those leverage ETFs 2 times, 3 times really work is a market that is trending. And there's no question that we can say that the market in the metals area is not a trending marketplace. So, an area to consider staying out of. Now, before I went to break out there, I threw I dangled a little carrot out there with regard to, hey, are you a person that believes gold priced in U.S. dollars has a ton of meaning out there? In essence, that is, the questions that I was throwing out there. And the answer to that question is absolutely, positively not. And I know that's just simply going to blow away all of your thinking out there. Now, if you take a look at gold priced in U.S. dollars out here, 1078.70, but gold trades around the world, does it not? More importantly, when you're going to make a correlation between the U.S. dollar index, which is up at 99.48 right now, up 51 cents, and you're going to go ahead and correlate that to what's going on inside of gold, I'm going to ask you the question, why? 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 Because what is the U.S. dollar index? For goodness sakes, if you just Google it, here's what you're going to find about the U.S. dollar index. It is a basket of 6 currencies. A basket of 6 currencies out here. That means it's a basket that includes the euro, which is the primary weighting, 57.6% out there. The Japanese yen, second weighting inside there, 13.6. The pound sterling, 11.9%. Canadian dollar, the loonie out there, 9.1%. You got the Swedish krona, which they say, I guess, might be the next big currency move out here. They've hinted at maybe manipulating their currency. Of course, all currency is manipulated, for goodness sakes, but let's not get into that. 4.2%. And then you've got the Swiss franc. So you've got 6 currencies. I'm giving you a hint out here. 6 currencies that make up the U.S. dollar index. So how should gold really be priced when you're taking a look at it as far as its movement? Now, we took a look at gold itself and took a look at those TAS market profiles to assist us, but how should you really be taking a look at Goldilocks out here? Look, here's what Stevie says. If we take a look at gold, the top portion of this chart out here, let me do this. Let's go ahead and close down one of these panels. So I'll close down this one. Here's gold priced in the just simply its continuous contract. You can clearly see the descending trend line. You don't need me to point that out. And this is based on closes inside of gold. So we're not looking at highs to lows. You come back into December 2013 as one of your touch points for a trend line. You can take a look at right down here around July, well, it was July 27th, I believe, or July 24th, somewhere right around there with gold. This is a continuous contract that we're looking at in 2015. We can see that the price of gold is trading above that trend line. That's interesting. But does it really matter? Well, wait a minute here. This doesn't tell us diddly with regard to how gold is trading in U.S. dollars. But of course, if you and I are going to really look at U.S. dollars, don't we really have to take a look at gold priced this way? Let's go ahead and turn this off. You say price this way. What the heck does that? That means we really need to take a look at gold priced in all those currencies. And how do we do that? It's really very simple. You go ahead and take the price of, it means that you and I want to get a unitless measure of gold. It means that we really want to take a look at gold priced based upon the U.S. dollar index. Now, that's what you and I are looking at right now, a completely different chart out here. You believed before this point in time that gold was in a downtrend, didn't you? You take a look at this chart here. This is gold priced based upon the U.S. dollar index. You tell me what the longer-term trend of gold is priced this way. I told you I was just simply going to go ahead and blow the fallacy in the way that you take a look at the price of gold. And we can see that the price of gold priced this way, we did see that trend line get broken. And when a trend line gets broken, just like you and I took a look at inside the NASDAQ composite out here, when a trend line gets broken, if it's a counter trend rally that ensues, you just see price move up into that trend line and rejects it, and then it just simply starts to move lower. That is not what we have out here with regard to gold. In fact, even if you take a look at when gold priced in the U.S. dollar index, the entire basket of currencies out there, because when you take a look at the U.S. dollar index, DX, when you take a look at it on my screen, what are you really looking at out there? What are you really looking at? You're looking at the entire basket of currencies. Well, for goodness sakes, if you're going to go ahead and take a look at the commodities, don't you think you ought to look at them priced based on the currency pairs? And this is the easiest way to do that. So what I will tell you that others won't is that gold actually priced in that basket of currencies has been in a rise, in a long-term rising trend. Now what you got to figure out is how do you trade it? And that's what I do for all of my subscribers at Mastering Probability, which you can go ahead and subscribe to, test it out for the next 30 days. I told you I was going to blow your mind. Voila. There you go. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 33, S&P is up a point. And after that segment, you might say, Stevie is full of it. I would argue otherwise, because after the last day and a half, I can guarantee you one thing. I'm not full of anything. You see, January 1st, I decided, hey, time to go on a diet. I mean, who doesn't usually make that commitment out here? Although, of course, I made that commitment. And the universe, you say that things happen for you. The universe was saying, hey, Steve-O, I'm going to give you a head start. And that head start began Sunday afternoon. And by Sunday evening, I was like, this isn't so good out there. And by early Monday morning, when I got up to work on the newsletter, there was no getting up. I was thrown down on the mat. And so in recovery mode out here. So, but, folks, I just simply going to give you something to think about out there. And I really think that it is worth thinking about. Okay, so back to the markets. There's a lot to take a look at. We can see with the S&P turning slightly green out here. So, again, take a look at these different patterns that we like to trade. Look, this is a market. Nothing could be more clear in taking a look at the NASDAQ composite that we're still inside the consolidation. With the gap up, with the gap down. Different message as we take a look at some of the other indices. Let's take a look at the Dow. What is it saying to both you and I? Well, what the Dow actually is doing, let's turn off these profiles. They're not, here's the thing. If I'm wrong, with regard to what the markets are doing out here, and the markets haven't found some kind of bounceable bottom, then yesterday's lows don't get taken out in the Dow, and we see a new lower low tomorrow, what we're going to be down to is a seventh wave move that would be pending because, it's a daily chart, so you need one more day in order to confirm that. So, the Dow has made 6 waves to the downside here. That's coming off of this high out here from November 20th. So we know that we pay attention to those seventh wave moves out here. If we take a look at the Dow, it's basically just simply gotten back to the support level from when? From back in December of 2014. Right, we've got the Dow that's basically have been moving in 2 ranges, mostly the upper range. We spent a little bit of time in the lower range out here, which was on August 20th when the price broke below the lows here of December 16th. But then, of course, price broke above it. That was back on October 15th, ran into this little trend line out here. So what the Dow did yesterday in its violent pullback, as it was making a low, ran right into support. right smack dab in the support. Now, if in fact we see that support level get broken, then we're going to have to wait to see what happens with that seventh wave move, if in fact it unfolds like that. You get broken, price runs down to where? Runs down to the trend line. You say that's the green line that is going up on my screen out here. You say, what trend line? I say, what trend line? I say the monthly trend line out here. That trend line that is still intact. There's your monthly trend line. There's your green line. We take a look at it on my screen out here. If we take a look at the low from March of 2009, our next touch point, serious touch point, was October of 2011. We switch, that's the monthly chart you and I were just looking at. We switch back to the daily. We can see price is still above the trend. The trend has not broken inside of the Dow, and price came down to support. Now, no bullish candle or anything like that on the daily chart, unlike the NASDAQ composite, which is so-so. It's a toss-up, a gap down, and a hammer candle. You're never really sure which one to use out there. That's what's going on inside the Dow. If we look at the S&P 500, get a feel for what it's doing. Well, in the case of the S&P 500, we can see they came right down to support. Look, old resistance becomes new support. An old resistance in the case of the Dow was basically the August 28th high, that September 17th close out here, you know, as it made this nice little double bottom pattern inside of the S&P. That's what we're taking a look at. We saw price move above that level with conviction on October 8th. We saw a nice old bullish engulfing candle that formed here on October 15th, even more conviction in that candle. We saw a nice little hammer candle that formed out here on December 14th. That tells you and I where the bulls and the bears are at least hiding out. That's all that this game is being able to interpret the charts, just like we took a look at to say, and it's always about looking at something a little bit differently. I promise you that those of you that trade commodities, those of you that trade gold, well, I can't promise you that you will. I would say many of you may take a look at gold a little differently when you take a look at it priced when you see the price of gold and then you see what the U.S. dollar index is doing. If you really want to find out what gold is priced based upon the U.S. dollar index, well, then go create that chart out there, or become a subscriber at Mastering Probability. So what price did here inside the S&P 500 yesterday is do nothing more than to come back to support. Now, if that level of support gets broken, which is 1993, what is called even Steven, 1993 out there, you'd have a close below a hammer. You'd be back in the lower part of the range out there, and that sets up some type of retracement or maybe even a revisit of that September 29th area. Which one, I don't know. We just pay attention to it as that occurs inside of the market. And that's what's going on inside of the S&P. Hey, let's go take a look at the New York Stock Exchange, the NYA. When you take a look at my chart out here, my screen, NYA, what did it do yesterday? What did the wider swath of the market do yesterday? Well, it's done a couple of things. Number one, yesterday, fairly bearish out here, was it created an island top. An island top. Now, look, the last island top that the NYSE had turned out to be a failure. That was on the trading days of April 15th and the 16th. And we saw price move slightly higher. In fact, it made its high back on May 21st of 2015. And we can see that that descending trend line has held as resistance for quite a period of time. Really, I thought that it looked like to me that the New York Stock Exchange would move up into December 31st, December 30th, 31st. But hey, the New York Stock Exchange didn't give a hoot as to what I thought that it might do out there. And instead, it moved lower, as you know. Well, look, when we came back to work yesterday, you know, the futures were down big. And what did the New York Stock Exchange do? It gapped down. Now, where did it gap down into? Well, just like in the composite, it gapped down into its most recent gap up, which also happened to be an island bottom. You want to talk about the fight between the bulls and the bears? The New York Stock Exchange gapped down to support. Support of what, you might say? Well, it's pretty simple. It's just like we took a look at on the S&P or the Dow out there. It gapped right down into support of what? The rising trend line, the long-term trend. That trend is our friend until proven otherwise out there. So we know that price is trading right at the trend line. We know that it also formed a very bearish pattern that moved down right into a very bullish pattern. Neither of these patterns have failed. We've got a tug of war that's going on. And that support level is really going to be the low of yesterday now because, you know, gap down, formed a hammer candle. That's the low here of 98.91. And if we see a close below that, then it spells curtains only. And this is what's so cool about this all happening in the beginning of the year out here, is because if we see that September 29th low get taken out, I don't mean tested, I mean get taken out at close below 9565.23, you write that on your pad of paper. That is the number. That is the go, no-go. That is the total change in trend inside the marketplace that will last for many months to come. Many. Then we will have a confirmed total change in character in the marketplace. Of course, that is just one man's opinion out there. And that's the man that said, hey, you're looking at gold the wrong way out here. So I may be, but I'm not full of it. I can't. The universe simply just said, hey, when I came back to work today, because all I've really had is some liquid products, I really can't be full of it. Just something to think about. Steve Rhodes with TFNN.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We've got the Dow almost to positive territory out here. The S&P is up about 5. NASDAQ Composite is up 3 out there. Have a question here that came in by email to take a look at the UNG The question is, hi, Steve, wanted to see where support is for UNG. So we'll take a look at both the UNG as well as the natural gas contract out here. If we take a look at the UNG and we look at just simply, look at a couple of things. One, we know that the UNG broke out on the trading day of December 28th. And that says, and we've got a gap. So that says that support is going to be at the low of that session, which is priced out, well, I'd tell you if I can get this thing to work right here. There we go. Support is somewhere around 802 to 777. Oh, I like that little that little Las Vegas slot machine. So 777 is going to be the number. Now, what's nice about that 777 level is you've got your TAS daily profiles. The daily bottom of the box is 789. So that should be a pretty good level of support out here. Resistance, looking at the weekly profiles, looking at the daily profiles, first level resistance, $8.67. And then you've got $9.14. And that is inside the UNG. Of course, we know the UNG is really traded off based upon what natural gas is doing. And if we take a look at nat gas, it looks very nice out here. Why? Well, because really it's above, well, it's trading right now at its weekly profile high. Price had closed above it. We've seen a little bit of a back and forth ever since the trading day of December 29th. What I mean back and forth, where price is really just trying to get ahead, get above, close above, stay above the TAS weekly profile high of $2.30. And if natural gas closes above that, takes out the high from December 29th, that price point being $2.38 out there. Well, you could have one doozy of an A to B equals CD to the upside. So the levels that I gave you inside UNG, really focus on the natural gas contract for making your decisions there. But hopefully that assists you with your trading and investing. Now, what do we want to take a look at here during this last segment that we didn't cover? Well, hey, look into the negative side of the trade out there. Take a look at this euro Japanese yen. Basically cut through a level of support like just a warm knife through going through some Kerrygold butter out there. Of course, it depends on whether you buy them in those tubs, right? If you buy them in the packs, you need a little bit warmer knife. But if you buy them in that little tub, you don't need any kind of warm butter knife at all. Now, this says the euro Japanese yen is headed to about 126.09. That says that the market's moving higher, have got some major headwinds out here. And that's why we're seeing not a lot of movement inside of the market. Just a little bit of churning to the upside and to the downside. You and I have these different patterns that we took a look at that are out there. They suggest until the lows of yesterday get taken out, a move higher. That's what you should anticipate. Doesn't mean you need to change your trade as long as you've got stops on both sides. But I want to make sure that you've taken a look at both sides of the trade out there. So we've taken a look at natural gas. We've taken a look at, let's go see, what is the VIX index doing? Somebody put up VIX at the low of the day out here. One interesting thing about the VIX is trading at $19.78 out here, which is good because it had been trading above all of the futures contracts out there. Here's the deal with regard to the VIX index. If we see the VIX index today, tomorrow, at any point in time, get below a price point of 1932 in your 1979, 1932 says the VIX then moves down to 1789. So if you get below 1932, price moves to 1789. That's going to put the type of energy for a minimum of a counter trend rally inside of the markets out there. So that would be the price point that I would be watching today. But otherwise, folks, it is Turnaround Tuesday. That means that coming up next, we've got our man David White, and then we've got the Tom O'Brien Show from 3 to 5, Andy Heck from 5 to 6. Have a great trading day. I look forward to seeing you on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.